dig through these numbers for us, because earnings per share actually rose 6% of revenue, though. What a stretch of losses.
19 quarters. As I said on radio, 20 quarters is hard to do, and I quickly got an email from IBM's PR department saying it wasn't 20 in a row. And they're right. 20 quarters ago, they had a 0.2% rise in revenues. This is an incredibly shrinking company, and I think the number to ignore is earnings per share, because with all the share buybacks, they've been able to reduce the number of shares. The divisor's smaller, so as a result, their quarterly sales, I think, is a much more important thing to pay attention to. Now, the plan was, this is Ginni Rometty's master plan, was shrink revenues, yes, but we'll be in more profitable sectors. We'll be in artificial intelligence, we'll be in software. The problem is, what it has resulted in is not just shrinking revenues, but shrinking profits. And this is a much, much smaller business, not just in terms of sales, but in terms of profit. And in terms of headcount, for that matter. There's a smaller business, and so the earnings per share numbers isn't important. That GAAP net income number is what's important here. And a little bit better on a year-over-year basis, but after so many quarters of shrinkage, it's hard to look at.
Frank is trying to get into the cloud. Are there any silver linings out there amidst the clouds for IBM?
You know, it's interesting listening to Cory. I always am amazed as a 30-year IBM watcher at the perspectives on IBM. They differ so often. I mean, my perspective is at IDC, we see a large portion of the IT market. I think all of us see cloud, mobile, social, big data, AI, IoT, robotics growing at 13% a year and becoming a core part of every business and every consumer market. And IBM is turning its battleship slowly. Yes, that's kind of boring, I suppose, but it now has 41% of its revenue squarely in that high growth part of the market. That's about the future of industry and consumers. And so it's not 50%, it's not 60%, but 5 years ago it was about 10 or 15%. So I see it really as a company that's making a lot of progress. And yes, they're certainly, like most companies that are trying to keep shareholders happy, they're doing a good job of engineering around the earnings, but also behind that, they're making a lot of investment in terms of acquisitions, new hires of people. So I see a company that, like Microsoft has been, you know, before it, going through a major transition to a totally new model and positioning itself for growth. So I see good results in those numbers. 41% new technologies, and growth in that part 13%, which is right on the market.
Yeah, I mean, I totally agree, and I hear that also anecdotally from businesses that are using IBM to solve some problems, that they actually find some valuable solutions there. But 41%, I'm a glass half empty guy, right? But that's more than half empty. That's more than half empty, and therein lies the problem. And you can also see this has come at considerable expense. I mean, if you look at if you go to the Bloomberg Terminal, you can do this really quickly just by going to the FA screen in the cash flow statement and look at how much money they've spent on acquisitions to get themselves there. We've got in the last, this is quarterly, $5.4 billion, $5.4 billion. This is the 2.6 billion. I mean, these are billions and billions of dollars being spent to get this company pointed in a different direction. So, and if I switch that to annual, you can look at those numbers again. And so, again, you've got these huge expenditures of billions and billions of dollars year after year to try to get them in a better position. So, as the revenues are shrinking and as the profits are shrinking, cash is flying out the door to do these acquisitions and flying out the door to do share buybacks. It puts them in a precarious situation.
Frank, how long do investors and analysts such as yourself need to give IBM, therefore? Because I'm looking it's not until the second half of 2019 until analysts on the Bloomberg start to see revenue picking up again.
Yeah, I think it's likely to be before that, to be honest. I think as they get to the 45 to 50% of revenue coming from these strategic initiatives, I think that revenue growth will be positive, will certainly be positive. So I don't really see that as far out. But to me, the more important question, again, people who are looking at the long-term future of IBM, I run our cloud research. IBM is number 3 in the cloud market. The cloud is the foundation of the entire IT industry for the next 20 to 30 years.
But there's so much competition, Frank. I mean, how do they get to number 1?
Well, what I'm saying is, Cory was saying, well, look at all the money they're spending. Have you looked at how much money Amazon and Google and Microsoft are spending? It's an expensive business, but it is an investment in a leadership position. They're number 3, and they grew their cloud revenues, the as-a-service part, by about 60+%. Amazon grew theirs at the end of third quarter, and when they reported in October, they grew by 55%. So Amazon's bigger in the cloud, but I'd say IBM's growth, they're definitely in that pack of leadership in the most strategic part of the future of the IT industry. So again, you can look at these things in two different ways. I look at it more as how are customers investing in strategic vendor partners? You know, who are they going to pick? It's not a long list. And in my view, IBM is on that list.
And there's no one better in the world than IDC to really figure out what those market share numbers are, and that's going to be so important. But being number 3 in technology is almost as bad as being number 2 in technology. The problem really is you know, the way technology goes is number 1 can be 5 or 10 times bigger than number 2, and number 3 is an also random. I mean, who's number 3 in search engines? Who's number 3 in chips? Who's number 3 in, you know, you name it. It's a tough spot to be in. IBM certainly knows that, but it's a disconcerting problem for them.
Well, I would say when it comes to the technology, IBM's number 1 in the AI part of the market. So that's from a technology standpoint.
Yeah.
So they've got some tough, I mean, to your point, they've got tough competitors breathing down their neck, but, you know, they're in the game. So to me, a company that large, that long a history, to be in the game and on the rise, that's a good story.